Politburo meeting, in today's CWC, which you will see a government statement this afternoon, the tone, the language will be quite positive. However, there is no details about the size of the package, about the mix of the stimulus. Usually they will only release these details by March next year. Frankly speaking, I think the package will still be modest. Augmented fiscal deficit will likely rise by 2 trillion RMB. That's only less than 1.5% of GDP. And the mix of it will be still largely supply-centric on infrastructure, on industrial capacity, maybe with a little bit more consumer goods trade-in program covering things like phones, but it's not enough. And back to what you asked, I do believe the deficit expansion and the slightly bigger cash for clunkers for consumers, that's the positive part. But overall, the size and the mix is still not enough to decisively reflate the economy.
What is enough then to decisively reflate the economy? What's it actually going to take?
Well, I think when I was in your Hong Kong studio 2 months ago, right after the Politburo meeting pivot in September, we talked about, yes, they made the pivot, they are trying, but because of the old school thinkings, it is still not the whatever it takes moment. And even fast forward to today, with this super strong language from Politburo meeting, it is still not whatever it takes moment. What would be that moment? I would say the completely shift from investment-centric to social welfare reform for migrant workers, for the lower income population, offering the benefits like schools, hospitals, and public housing. It will cost them 7 to 10 trillion for the benefits itself, plus some programs to reduce the housing inventory. So that's a $1.5 trillion program. That's the whatever it takes moment.
Robin, do you think, and you mentioned social measures earlier on. I want to ask you, I'm not sure if this is an economics question, it's perhaps something more along the lines of sociology, but do you think among policymakers there is an understanding that consumer spending habits of this generation have changed, do you think? And that takes us all to, and sorry, it's a long-winded question. One of the things that you flagged as well is, while the policy stance is as clear as it can get to support the economy, there is still some risk in the implementation. And I'm wondering where along that line, the transmission line, do we need to keep an eye on whether or not this becomes successful or not, Robin?
Yes, the consumer behavior has changed for 2 reasons. One is due to the lack of social benefits. Migrant workers and the lower income population save a lot. This is a precautionary saving. Migrant workers on average save 45% of their income. This is a part they can address it with reforms by providing social benefits to migrant workers to unleash this huge consumption potential. The other problem is the housing downfall. With the negative wealth effect from the declining housing price, people don't want to spend as much as before. That's why the central government also needs to step in, using its own balance sheet to help to reduce this very painful adjustment of the housing market by, say, purchasing these unsold units from developers, reducing the inventory overhang. So for both the social welfare reform and helping developers to reduce the housing inventory, central government can play a role. And if they made that step sometime next year, I would be much more positive on the path of reflation.
Robin, just quickly, you've been mentioning about this shift to whatever it takes or takes mindset. What would actually cause that shift, and could it be something that happens under President Trump next year?
Well, I think that's a good question. Some of your competitors ran the story of the yuan devaluation. I don't believe it. I think China will focus on domestic demand rather than use decisive, sizable devaluation, because it's not worth it. Maybe it could help the exporters a little bit, but it may trigger self-fulfilling capital outflow. That pressure, PBOC knew it. They won't do that sizable devaluation. And by the way, exporters are much better positioned than 6 years ago, the first tariff war back in 2018, because Chinese exporters diversified. Now, U.S. is a smaller market for exporters in China. They are more in emerging markets, and they upgraded from just assembling phones to export robotics and cars. So I don't think they need that sizable devaluation to compensate for tariff. Instead, they need to focus on domestic reflation, how to get consumers to spend again with job creation, with better social safety net, and with the government help to stabilize the housing market. So yes, potentially with the tariff from US, with the job pressure, with the feedback from our social dynamic tracker, maybe policymakers' understanding on deflation will deepen again next year. And that could trigger this right dose of policy, the combination of reform and the consumption-centric stimulus.
Robin, I'll try to get some numbers out of you. I need to focus on the change in policy stance, moderately loosen monetary policy. Markets trying to figure out how low can government bond yields get, number one. And number two, China's traditionally aligned money supply growth with GDP growth. Do you think that changes as well?
Well, I do think the monetary policy tone change is more for forward guidance rather than a complete change of policy trajectory, because China has been cutting rates, injecting liquidity, right. So it has been doing the monetary easing anyway. However, the key here is fiscal policy. Can they widen government deficit? I would say a 4% official budget deficit will be a positive surprise. And with the tone from Politburo meeting 3 days ago, it's very likely they can widen the budget deficit to 4%, the first time ever. Even in the first year of COVID, China only set 3.7% official budget deficit. So 4% is definitely a step forward to try to say goodbye to these old school thinkings. And of course, that's just a small portion of augmented deficit. They have items below the lines, local construction bond, special central treasury. Put them together, I'm talking about 2 trillion RMB expansion of augmented deficit. And I think that part will be more useful than just the monetary policy.
Robin, thank you so much. It's a great day to be in Beijing, as you point out. Chief China economist at Morgan Stanley from our Beijing studios today. Coming up, our team at Bloomberg Intelligence has put out its top 50 companies to watch this year, and we've singled out a few to talk about in a couple of minutes.
On the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer Wednesday, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. You're watching The China Show. So our team at Bloomberg Intelligence has compiled this list of the top 50 companies to watch. going into next year that's really out of the 2,000 companies that they follow around the world across really this whole list of sectors. Now, you're looking at some of the companies here in the region that have made the list. Here to talk about one in particular is Patrick Wong, our senior analyst and head of Bloomberg Intelligence here in Hong Kong, and why this Hong Kong developer made the list. How did they make the cut, Patrick?
You see the challenge for the Hong Kong housing market over the past 2-3 years. But having said that, I think Sun Hung Kai this year going to 225, right, could be a potential one that will outstand other developers. In terms of the home sales, I think the momentum could be pretty strong for them. The thing is they have a really strong pipeline, and that they are targeting like 25 billion Hong Kong for the sales, which we think that will be like 20% higher than that target. So that is driven by a couple of things like the luxury sales momentum for those Sun Hung Kai projects are also picking up a bit. We see some mainland Chinese coming in to buy again, and this is driven by some stimulus that happening over the past couple of months, and then potentially with 225 as well. And then more importantly, I think for the mass market, we also see the potential catalyst, like the rental is going up quite a lot over the past 2 years, and then now it's also some pent-up demand, and then coming to buy properties again to 225. So potentially Sun Hung Kai is also the one having the largest land bank in Hong Kong, so that will be the one really benefit from that trend.
And given we've got the Fed continued to keep easing next year, how's that going to also play into the outlook, do you think?
Yes, I think the market is driven by the interest rate as well, right? So we see Federal Reserve cutting rates by 75 basis points already, and then Hong Kong, the prime lending rate cut 50 basis points already as well. So hopefully next week we will also see another Fed rate cut happening, and then if the prime lending rate also cut further in Hong Kong, that's also supporting the market, because right now I think the important trend is the mass rental yield is close to 4%, and that's also higher than the mortgage rate already. So that is also usually a positive sign to see more end-user demand or even some investment demand to support the housing sales.
And how did, I know you answered part of this already, but how did you guys arrive at this specific company? What does this company have, for example, that many of the other Hong Kong developers perhaps don't quite match up to?
I think for Sun Hung Kai, they have a really strong land bank, honestly, right? So that's the one thing. And then some other developers, I think they have really smaller size of projects, and also some of them, they rush to sell, but they sell at really low prices, right? So that is also affecting the actual sales for those developers. So that is something that Sun Hung Kai relatively, I think the leverage ratio is relatively low, like roughly 20%. Yep. So that's also really strong to support the home sales strategy.
All right, Patrick Wong there. That was our APAC real estate senior analyst and head of Bloomberg Intelligence in Hong Kong. And you can read the entire Bloomberg Intelligence list. Subscribers can find that on the terminal. It's also available on Bloomberg.com. Now, we've gone from one positive story to one that's a little bit more negative for Hong Kong's property sector. Our attention now on New World Development. It has been a company facing a lot of pressure to manage its finances. We've also seen the recent leadership changes as well. Now to the next test, which could be its perpetual bonds, and there's some $4.5 billion outstanding. Our opinion columnist Shuli Ren joins us this morning. And Shuli, what's sort of prompting these concerns that we might see the perpetual bonds maybe being extended beyond their deadline?
So whether perpetual bond is debt or equity has always been a matter of concern for traders, right? When the times were good, people just treated the perpetual bond as a straight bond. But when times are bad, the companies, they have the right to not call their bonds or even pay their coupons. And then we know time is not doing that great for New World Development. They wanted to sell their assets to beef up their balance sheet, and that asset sale has been quite slow. And we see that the big commercial real estate sales in the last few months in Hong Kong, we are seeing a lot of very heavily discounted prices. And also, after Adrian Zheng left in late September, New World Development had 2 CEO changes, and both of them are now coming from the Zheng family. And that makes investors very worried that the tycoon family is just going to let go of these developers and let them survive on their own.
We just discussed Sun Hung Kai on one end of the spectrum, and the reason I bring that up is, is there a risk we look at Hong Kong developers in a bucket and compare that to the sort of distressed situation that the mainland developers have found themselves in, for example? Or are those two buckets far apart still?
I think they are a little bit far apart because with the mainland developers, we know they made money in the last 10 years and their empire was built on the house of cards. Whereas for Hong Kong developers, they are from tycoon families who had made a lot of money over decades, right? And then that is a little bit different in that sense. But the question is whether the parent company, the parent has the incentive, financial incentive interest in propping up the child. That's the issue here.
The issues in facing New World development, but what does that sort of say about Hong Kong's status as a financial centre as a whole?
Yeah, I mean, New World issued all these bonds in 2019, 21, and 20, right? And that was just a few years ago. And no one ever questioned the family's financial might or any of the Hong Kong names. They were always very prime, very golden. And now people are stepping back and say, well, it is possible that they are not going to make that implicit guarantee of perpetual bonds.
Shu Li-ren, thank you so much, our Bloomberg opinion columnist there. And in the next hour, and speaking of bonds and issuing debt, we'll be hearing from Citi, of course, on the outlook for debt issuance and debt sales. Of course, they are the #1 ranked as far as the G3 currency issuances are concerned. Rishi Jalan joins us at those times on your screens. This is The China Show.
On a $100,000 US margin loan, Interactive Brokers charges just 6.08%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg.
You're watching The China Show and sort of talking about what's really at the heart, or one of the issues at the heart of that US-China rivalry, and that comes down to what's happening in the tech space and the advancements that we see and potentially how the US is also trying to restrict China's progress in this area. But we've actually just had Huawei releasing a new phone, the new Mate 70, that's come out, and this is an indication perhaps the moves that we're seeing in terms of progressing to smaller, more advanced technology are stalling a little bit. So last year we actually had the Mate 60, and this essentially we did a tear down of the device, and it was found that they'd built a processor with the same 7 nanometer technology, and that was a real win for the company because it showed that they'd actually been able to reach that point, and maybe they were around 5 years behind the likes of TSMC in doing so. Now they've just released this new device, and from the Mate 60 to the Mate 70, it's still that same technology, and so it tells us maybe they're stalling a little bit. Yeah,
it's called the Kirin chip. I think, yes, the Kirin chip is built with at 7, which is interesting because that made so much news last year, the teardown. Once we were able to figure out really how, what the chip was in that as well. I can't seem to recall the time difference between when that was, and obviously the narrative here is that the momentum is stalling because we were expecting this specific one to actually show a little bit more advanced technology as far as 5 nanometers is concerned. But, I mean, Yeah, but I guess good things take time.
TSMC, I mean, just to put it in sort of context,
Yeah.
they came out with a 7-nanometer chip in 2018, and they came out with the second iteration of the product in 2019.
Yeah.
So again, it's just sort of what's that tech leadership looking like, and what's the sort of gap between US and Taiwan versus what's happening in mainland China.
Yeah, well, interesting too, because Sean Taylor, who joined us earlier on, talked about one sector that is showing some good earnings revisions in China are some of the chip makers as well. So it's all relative. Speaking of chips, we'll keep you abreast of what's taking place in Korea. I'll look at these markets amidst all these headlines coming through out of Seoul. Plenty more ahead on this and more. This is The China Show.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power, twice daily, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Wednesdays, only on Bloomberg.
We're in Chicago. You met Barack and Michelle Obama. Did they ever have overdue fines or anything?
She got engaged to this gentleman. I was recruited to head up the Baltimore Library, and so in that July, I missed the wedding.
Whatever happened to him?
He did well.
We see an incredible amount of potential benefit from this technology, right? Something that Dario and I talk about a lot, together with the company, with our co-founders, is just the potential for this technology to transform sectors like, healthcare, right? Or even science. I think some customers that have worked with us, Pfizer, the Dana-Farber Cancer Institute, right? The type of work that they're doing is truly amazing, and we're proud to be able to support businesses like that. I also think we have felt very strongly that there are some lessons to be learned from kind of prior, technological waves or innovation. And this is not that, we're so incredibly prescient. We've just had, several decades now of time to kind of look back on things like social media and say, wow, there was a lot of good that came out of this, but there were also a lot of harms that were kind of caused by this technology. Whether or not you could have anticipated those in advance, hard to say. But I think we are trying to be the most responsible actors that we can be and think about what are the, potential externalities that could be caused kind of accidentally by this tech. And we really try and take a very broad approach to how we think about that. Of course, we don't have all the answers. We try to be humble, but we've tried very, very hard to sort of think about what are the areas where something kind of could go wrong.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Welcome back to the China Show. Taking a look at the Hong Kong session, half an hour into trading this morning, and it's pretty range-bound, and that's kind of not surprising. You're seeing sort of lower trading volumes as well, but you're probably not going to have too much conviction right now, given we're still awaiting any sort of readout, perhaps from the Central Economic Work Conference.
Yeah, and I think most of the economists that we've talked to so far don't get your hopes up for this specific one, although they could break with tradition, of course, because of the sort of extraordinary situation the economy's in. But tradition has it that, the details of this will actually be more fleshed out in March of next year. All that being said, we do have a lot more certainty on sort of other matters that matter in the world, like the Fed, for example, the US CPI print, which came in overnight, in line with estimates. There's some changing narratives right now, a bit more complication in South Korea. We'll talk more about that in a moment. Following that address from the president, it's number one. Number two is this Aussie jobs print, which came in 90 minutes back. I think we're going to show you this melt up in yields that we're seeing there, 10 basis points in the 3-year. Repricing around what the RBA might not be able to do, which is cut rates, I think, at the next one, given how strong the jobs data is. Although we do have to emphasize that the jobs number is extremely difficult to predict.
Notoriously volatile.
Yeah.
Not exactly the most trustworthy.
Well, yeah, economists are always wrong on this one.
Yeah.
Not that they're right on everything else, but this one specifically, come on.
It's a wild card.
Yeah. We're just having fun here. This one is almost like you take the darts out and you see where this lands. In any case, of course, markets price with the information they get. That's what we got so far. Asia ex China, Japan is doing well. South Korea is at about the midpoint of this range from today. 0.7 to 1%. We were up as much as 1%. We were down to about 0.1 to 1%. The yield story, 2 and 10, 4.15 and 4.30 on the U.S. 10-year yield. Suffice to say, we'll probably get a late rate cut next week. Out of the Fed, the question is really on Japan, following what we've heard so far, and maybe that they're willing to wait, the BOJ. And, of course, also in the Chinese currency, given all the news that's come out from our peers in the industry.
Our peers in the industry, yeah, we've been watching the yuan after reports from Reuters that Beijing may allow the currency to weaken ahead of a potential trade war with the US. Let's get more on that now, bring in our Bloomberg Intelligence Chief Asia FX and Rate Strategist, Stephen Chu. And Stephen, we knew that off the back of this report it was going to put even more attention onto the fixing. And so what did you make out of the fixing today, that report, and the market reaction we're seeing?
I think firstly, as you guys have mentioned, it's from our peers, so we have to be careful. But even if that's the intention of China, I think there are two angles that we can look at it. The first one, it's actually basically what we already know. Because we know next year we're going to face U.S. trade war 2.0. The Fed may not be able to cut, so a strong dollar backdrop. So the yuan basically is going to have to weaken regardless of whether China say or not. So now they say first, they want market to be prepared, because eventually when the dollar gets so strong, the rest of the basket in the yuan basket are going to weaken so much that the yuan basket will be too strong. Yeah. And China, we just have to let fixing go, just like what we have saw over the last few years. So eventually the yuan will weaken. It's something that we already know. Level-wise, let's not be too aggressive. I think the last time during the last trade war, the offshore yuan down by over 13%. Even half of that would bring us to 7.5, 7.6, and even closer to parity to the Hong Kong dollar. So I think China is just trying to let market prepare for that. Now that's the best case scenario. The other angle, if China really want to depreciate the yuan, which is the scary part, they may be talking about the basket, because the yuan basket has been rising this year. This is because the rest of the Asian currencies, especially Indian rupee at record low, the peso at record low, basically the basket might be too strong. So if China really want to go against, counter the trade war, the trade tariff, they actually may want a weaker basket. But that would be scary, because if they want a weaker yuan basket, that means dollar yuan will have to shoot up even higher.
Do they have, I don't know, do they have the tools to okay, there's a big difference between letting a currency weaken and devaluing it, right? Devaluing the basket, that's another step altogether as well. Do they have a tool to devalue the basket, for example? How would they do that if that was the case?
They would have to start from bilateral. The easiest way is from the fixing. Say, out of nowhere, they could...
Dollar-China fixing.
Dollar-China fixing.
Okay.
And then, obviously, the basket will follow when we get a much higher fixing. And that could happen, because, for example, in 2015, 8-11, that's what happened. 2% depreciation overnight in the fixing, and that's what they could do this time as well.
How are other countries likely to respond to that? Because I imagine the likes of India, for instance, Japan, I mean, no one's going to like seeing the yuan effectively devalued against their currencies.
I think at least what market would do for those economies, say Japan, South Korea, all the exporters, they're going to devalue the currency for them. Or we could say depreciate, if not devalue is too much of a strong word. Because like everybody basically, when China moves, everybody, especially in Asia, will have to react. So all the Asian currencies, especially the won, even without the domestic political turmoil, will have to depreciate quite a lot. So we'll see the beggar thy neighbor theme coming back again next year. Basically.
What about, separately dollar yen, because there's been some news over the last 24 hours that maybe a rate hike is not very urgent at this point.
To be honest, if they don't hike this month, it's going to be January. Because when we look at the fundamentals, wages are higher, inflation all above 2%, whether it's core or headline. They just have to hike. They just have to keep doing QT. So it's just a matter of time for rates to go up. But whether the yen strengthens is another story because the rate gap is still huge. So the yen may not benefit that much from a rate hike.
Two separate things.
Yeah.
Stephen Chu, fantastic work there. Our Bloomberg Intelligence Chief Asia FX and Rates Strategist. Let's get the take from Mark Cranfield from our MLive team joining us out of Singapore. Mark, two separate things there. As Stephen was pointing out, one on the BOJ, one on the yen. Just your thoughts on both.
Yeah, thanks, Stephen. You've invited the currency war for next year. I'm looking forward to that. I mean, he obviously he's quite right, though, that the basket would be the way. If China wanted to be aggressive, they would have to do it through the yuan basket. But if anyone who says to you China is thinking about weakening the yuan, just look at what they've done this year. The yuan has been weakening all year, or actually for most of the year. So it's not a question of what they're going to do. They've been doing it anyway, partly in response to the US dollar. And it will be no surprise to anybody if they were to repeat something like 2018, when as tariffs come in, assuming they do, that they regulate their currency in relation to the amount of impact they expect it to have on their economy. So no one is going to be at all surprised with that. The tricky bit, really, overall for the rest of the world is the starting point. Dollar yuan, the starting point here is way above 7. Back in 2018, it had a 6 big handle. The yuan relative to the US dollar was much stronger in 2018 than it is now when the trade tariffs in the first round hit. So that's a different scenario for the rest of the world. That's why emerging markets are especially nervous about what might be coming down the pipe in next year as well. So that's a new thing that people have to deal with, and how far they calibrate the yuan weakness relative to other currencies. And that's partly why people are thinking about we might be at 7.5, 7.6, something like that next year. But I think you will continue to see it on a gradual basis. They'll continue to use the fixing to moderate the daily moves. So it's very unlikely. The idea of a one-off devaluation or something like that, that's a very serious step. And it would be completely out of character with the way the PBOC operates.
What about what we're seeing in Korea this morning, Mark? How are you interpreting the latest political developments and the direction that we're seeing in equities? Because they're still in positive territory, just a little bit.
What investors really want to see is an end to this back and forth between the president and the rest of the parliament. They really are hoping that this weekend will draw a line. Whatever is needed to be done with the impeachment process or something else, they're really hoping when they come into work on Monday, it's all behind them and they can start to look back at the relative value, which is pretty obvious in Korean equities here. Particularly if you look at the Kosdaq index, at one stage this year, it was down 32% from the high that we saw earlier in the year. That's a very significant fall for a pretty major index. It's actually, on a relative value basis, actually dropped below the MSCI Pacific index for the first time since the pandemic period. So on many measures, Korean equities are very reasonable in comparison to their peers in Asia. But people need to be confident that the nasty politics situation is at an end. They need to see that behind them. So pretty significant for investors here. What happens this weekend? They would like to see a clean slate, a line drawn under what's happened. If it doesn't, we could be looking at next week, could be looking at some pretty high volatility again in Korean assets, because people will not be happy that it's dragging on even further.
Mark, maybe just to change the page here, a couple of headlines overnight, one, and all of it related. Elon Musk, first person to have a net worth of north of $400 billion. In fact, it's now closer to $500 billion. The S&P, we've had some forecasts coming out from strategists, maybe another 9-10% next year. We're on track for 30% here this year. Is that still the cleanest read structure-wise, passive investing, flows, correlation, all roads seem to keep leading back to the S&P, whatever, agnostic of what we talk about here, Mark.
We'll know when the top is in for American stocks, when Elon Musk decides to IPO himself. $500 billion for himself. That would be a pretty good IPO. I mean, no, seriously, it is getting quite crazy what's happening there. But you can see, I mean, people believe that what policies they expect to happen next year will be very supportive for American markets. And it's almost becoming a situation of you can't afford not to be involved in US stocks, because if you're looking at, they just seem to it's like a juggernaut, keeps on flattening every other market in the world. You just can't be left out of it. But if you look at a company like Tesla, for example, it's probably become the most dangerous stock in the US market. It has sucked in so much capital since the US election, even though if you look at it, the amount of revenue it generates and the cash flows and things, it is not comparable to the other Magnificent Seven stocks. It would definitely be lagging those on that basis. So its outperformance is really pretty shocking, and you really have to keep your eye on that. If we see a sign of people losing faith in Tesla, that would be a very negative signal across the broader market. So yes, Elon Musk is very closely tied to the performance of the American market, and we also need to see how foreigners interpret the policies that do come in next year. If it satisfies them in their belief that yes, it really makes American markets have an exceptional value, then yes, it will continue. But the minute they start to question the need for the US markets to have a premium over everybody else, there's a very long way for it to tumble. But not many people are going to take that bet right now. It's something you don't want to stand in the way of.
All right, that was our Bloomberg MLive strategist, Mark Ramfield, there in Singapore, and I'd love to see the subscription for an Elon Musk IPO. But just talking about his wealth and how much it's risen. I mean, just on one day alone, he added nearly $63 billion overnight. So as Mark says, where the US equities go, it's very closely tied to the fortunes of Elon Musk as well.
Yeah, I just need to correct myself. I left out three zeros. I meant trillion, not billion. So he's nearly worth $500 billion.
It is absolutely wild. All right, well, of course, it's that relationship as well between Elon Musk and Donald Trump, and that focus on the inauguration. Nice. We know he's going to have a front row seat, but maybe who else could be front row is Xi Jinping. We've been hearing that Donald Trump has invited him to his inauguration. Will the Chinese leader attend? Which way is he going to RSVP? We'll have more details on that ahead. This is Bloomberg.
Hong Kong International Airport is the busiest air cargo hub in the world, connecting the Chinese mainland and the Greater Bay Area to the markets in Europe, the US, and around the world. The GBA and the Chinese mainland is the most important market that we operate in. The transportation route came about because we wanted to optimize the amazing potential of the Greater Bay Area in terms of export cargo to the rest of the world, and indeed import cargo into a market of over 85 million consumers. Cargo is delivered to our intermodal terminal up in Dongguan and cleared in the Chinese mainland. The cargo then is taken by a ground handling company to the terminal or straight onto the aircraft and then flies off to its destination. The facility is under the jurisdiction of the Hong Kong Civil Aviation Department and also the Hong Kong International Airport, which means that we can imply all the rules and regulations of Hong Kong in the heart of the Greater Bay Area and clear customs and do our security clearance all in the Chinese mainland before we move it through into Hong Kong. The system is so unique because we are bringing Hong Kong expertise and skills into the heart of the Greater Bay Area. The key for success is speed and efficiency. Cathay Cargo is in the top 5 combination carriers in the world. We put our cargo onto the bellies of wide-body aircraft and also 20 dedicated freighters. We're also purchasing 6 brand new state-of-the-art Airbus A350 freighters, as well as having options for an additional 20. What makes me most excited for the future is the growth potential of the Cathay Cargo business and the Hong Kong International Cargo Hub, and also the role of technology and automation in the future of air cargo.
earnings season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Right. Outgoing U.S. Treasury Secretary Janet Yellen says Donald Trump plans for broad-based tariffs on China, well, they'll hurt the U.S. economy and provoke retaliation from Beijing. Now, she spoke to us exclusively in Washington.
Many countries, when they're faced with unilateral actions of that sort, look for ways to retaliate, and my guess would be that they would do that. We have in areas of concern where I've expressed repeatedly concerns with overcapacity that is developed in Chinese advanced manufacturing industries and clean energy, semiconductors, and the like. We think it reflects active, large subsidies that are flooding the world with exports and threaten to drive our firms out of business in areas that we think are critical to our own future. We've put in place tariffs. Now, they're strategic. They affected $18 billion worth of trade, certainly not all of our trade with China. And we did it to make sure that China's actions don't undermine our own plans to support these sectors. But broad-based tariffs, almost all economists agree that what they will do is hurt us by raising prices, possibly substantially, and making it more expensive for firms that need inputs from China to be able to acquire them, and harm our competitiveness of firms that rely on those imports. So we've taken a strategic approach, focusing narrowly, and a broad-based approach I have serious concerns with, as most economists do.
That was the U.S. Treasury Secretary Janet Yellen speaking exclusively to Bloomberg. And despite his threat of stiffer tariffs, Trump's reportedly reached out to Xi Jinping, inviting the Chinese leader to his inauguration next year. Let's bring in our senior editor, Bill Ferries in Singapore. And Bill, this is the most read story on the terminal so far this morning. Seems like a lot of people want to know, would he RSVP yes or no?
I think there's close to zero chance of this happening, and there's almost no upside for Xi Jinping. It's quite possible Donald Trump has invited him. I don't know if it's a serious request or just kind of an olive branch, a way to start things off. But foreign leaders do not historically attend U.S. presidential inaugurations. And then there's a huge risk that Donald Trump will say something during a speech, whether it's announcing tariffs or making a joke about China, that would put Xi Jinping in an extremely uncomfortable position. This is, after all, President-elect Trump just made a joke in the past week, calling Canadian Prime Minister Justin Trudeau the governor of America's 51st state. Imagine doing that to Xi Jinping when he's sitting in the front row of the stage in front of you. So I think, listen, it might be a nice olive branch. It might be a way to start things off. I'm sure the Chinese are going to look at a way to politely respond to this if the request was made. But I don't think Xi Jinping will be attending the inauguration on January 20th.
Yeah, and Bill, I guess to your point, there is a daily Ministry of Foreign Affairs briefing that we might be looking ahead to, that they might use that as a gauge, I guess, or as a way to somehow politely decline. But Bill, there's a literal invitation. There's also the symbolic part of it. And does this open up the door really for, I guess, to find common ground? We keep talking about how they're so far apart. They're strategic rivals as they are. But, are we sleeping on warmer, perhaps relatively warmer relations between the two here because of this?
Yeah, I mean, I do think there's a lot of potential in this, and I think probably the only way for the Chinese to respond is in a polite way, and to use that hopefully as a door to have some talks. If you remember the start of the Biden administration, it was very early on in Biden's term when he sent Anthony Blinken and some of his top officials to Alaska to meet with some of the top Chinese diplomats. That didn't go very well, but I think leading into it, there was a lot of hope that, hey, at least we're starting off this new presidential term with talks. I think that's the way to look at it, but I don't expect to see Xi Jinping sitting in the Washington cold outside on January 20th, potentially not being able to respond to Donald Trump's speech about him.
Yeah, the excerpt from this report out of CBS, and I guess just to bookend this conversation, Bill, State Department records dating back to 1874 show that a foreign leader has never attended a transfer of power ceremony. So I guess that closes the chapter to this, or the book to this story. Bill, thank you so much for the firm take there out of Singapore, our senior editor, on this invite. Right, up ahead here on the China Show, Bloomberg Intelligence is out with a list of the top 50 companies to watch next year. We discuss why one specific aluminum maker has actually made the cut. This is Bloomberg.
Names in global leadership are on Bloomberg.
What's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a continent of prosperity. That's what we aim at.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. When I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker, or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Welcome back. You're watching The China Show. Our team at Bloomberg Intelligence has compiled this list of the top 50 companies to watch in 2025. That's out of the 2,000 companies that the team follow from across the world, across different sectors. Now you're looking at some of the companies that have made the cut from the Asia Pacific region. Here to talk about one specific company, China Hongqiao Group, is Michelle Leung, our Bloomberg Intelligence head of Asia Metals, Mining and Sustainability. So, yeah, tell us about why this company in particular.
Yes, so China Hongqiao is actually China's largest aluminum smelter. So in terms of output, it accounts for like 8.3% of global output. So it's huge. And then we see three catalysts coming in. First, industry-wise, we think aluminum price is likely to rise in 2025. One reason is because it's likely to turn into deficit. And of course, Hongqiao is being the largest aluminum smelter in China, so it's very well positioned to capture the growth. growth. We're expecting its earnings to up by 60% in 2024 and then another 11% in 2025. So momentum has been really strong. And secondly, as China Hongqiao, it has a very high percent of hydropower-driven capacity. So what's good is it leads to a lower than peers emission per ton. So in 2025, what's happening is Chinese government is planning to include aluminum in their carbon trading system. So the more polluting companies tend to pay a higher carbon price. So as a result, given that Hongqiao has a lower than peers emissions per ton, it's likely to stand out with a lower carbon cost. So again, it's put it in an advantage. And thirdly, we expect its margin and profits to stay above peers, mainly because of its bauxite self-sufficiency. We are calculating it as to reach at least 80% in 2025 as compared to its peers like charcoal is only 68%. It's very important for its cost control and it put it in a lower than peers cost structure as well. And also we see new income streams coming in. First is recycled aluminum business is set to ramp up. And in this side, we are seeing a strong demand coming in a few years. And secondly, is investment in Guinea. There is the world's largest iron ore mine that it has invested. It is likely to contribute more income as well.
You mentioned the outlook for aluminium prices for next year, and you're positive on that. Is that sort of a direct correlation then, high aluminium prices impacts positively profits for smelters?
Yes and no. Of course, higher aluminum price is good for the profit, and which we are expecting their profits to expand in 2025. But also we have to look at the cost as well. Alumina, which is the major feedstock of aluminum process, is the key. So what's been happening is that alumina price surged by over 70% this year. And in terms of the total cost, it jumps from 38% in 2023 to over 50% in 2024. So it's a very large factors to look at. So what's the good news is we are seeing that the supply of alumina to expand in 2025, which could possibly drag the price lower. So which means lower cost for the aluminum smelters. And we also expect to see it turn into surplus. So that would literally give a higher profit to the smelters.
All right, that was Michelle Lung there, our Bloomberg Intelligence Head of Asia Metals, Mining and Sustainability. And you can read the entire Bloomberg Intelligence list. Subscribers, go find that on your terminal. It's also available on Bloomberg.com. We will have plenty more ahead. This is Bloomberg.
Hong Kong International Airport is the busiest air cargo hub in the world, connecting the Chinese mainland and the Greater Bay Area to the markets in Europe, the US, and around the world. The transportation route came about because we wanted to optimize the amazing potential of the Greater Bay Area. Cathay Cargo is in the top 5 combination carriers in the world. We put our cargo onto the bellies of wide-body aircraft and also 20 dedicated freighters that we operate.
For the 4th consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot. Those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
It's 11:29 a.m. in Tokyo. Japanese markets just about to go into their break. Big focus on the timing of when the BOJ is going to be hiking next. We had some exclusive commentary, comments coming through from BOJ officials saying that maybe December wasn't going to be sort of the base case. And of course, it kind of comes down to, okay, is it December? Is it January? But now we've actually got a new survey out saying that indeed the first month of 2025 is now the most popular timing for the next hike.
Yeah. So if you're making a trip to Japan, and many are actually, right, coming up to the Christmas holidays, don't take this as investment advice, but maybe change your money at the airport and not now. No, actually, don't change your money at the airport. They have horrible rates there.
I think you can find better ways than changing at the airport.
Don't wait to the last minute is what we're saying. There we go. Or just save money. Don't go. Okay. Asian markets, 0.7% to the upside. A lot of that is really down to the tailwinds coming through the Japanese markets. There we go. In terms of sector groups, most sector groups are higher. You have IT top left, top row. So weak spots coming through. Interestingly, I think that one of the tailwinds too on the macro front is really the weakness we're seeing in the U.S. dollar and certainly an inflation print out of the U.S., which didn't give us any nasty surprise. In fact, it came in bang in line with estimates almost across the different metrics, effectively cements, and hopefully that remains the case, that we don't get any sort of shockers between now and the next Fed meeting. But rates are coming down next week, and that rates will trend lower going into next year. I think it's 3 to 4 cuts price between now and the end of next year. Now, what does it mean for debt issuance? What does it mean, this recovery? And let me bring in the Chinese story as well, that, this pickup in activity we're seeing out of China. This time yesterday, we were speaking with Lena Choi, the Associate Managing Director at Moody's, and we asked her really about the trends they're seeing in terms of debt issuance this part of the world. Have a listen.
Onshore funding market, whether it's the bond market, whether it's the bank loans, have been quite supportive, has always been quite supportive. Interestingly, in the last 6 to 8 months, we have already seen some highly rated POEs already tapping the offshore bond market. And with